Rich, thanks for joining us today. I appreciate you taking some time to visit with me, our clients, and maybe prospective clients as well on Air Asset Management, your firm, and all the great things you're doing over there. Maybe give us a little of your background and kind of how you got into the life settlement space.
You're welcome. Glad to be here. I got into the life settlement space in 2006. My background is roughly almost 30 years of financial services exclusively. I started my career as a producer, a financial advisor and insurance producer in 1993. So I've been involved in the insurance space for a long time now. So I had a 10-year career. At the end of that, I was with the Ameriprise. I was running the Chicago office, and I did a roll-up of financial planning practices. So I understand life insurance and annuities from the producer standpoint and from the consumer standpoint. I had heard about life settlements in the 90s, but didn't get involved until 2006 when I was running an investment bank, a predecessor to Air Asset Management called Alternative Investment Resource. And became interested in the asset class because there's an arbitrage in the pricing of these life insurance policies on the secondary market versus their cost because of lapse ratios and other things, and just got really fascinated and intrigued. And I was a partner in a number of businesses in the life settlement space back then. We didn't scale up prior to the credit crisis, so we ended up having to wind those businesses down, but it gave me a great introduction to the asset class. And when an opportunity in 2014 came to come back into the space, I jumped at the chance, and we've been at it ever since.
So why don't we cover just at a high level life settlements, what that business looks like. I think some of our clients are going to be familiar with that, but a lot that is going to be a new kind of frontier asset class for them. Maybe explain just again high level how that works and where the opportunity is.
So a life settlement is a purchase or sale of a life insurance contract in the secondary market for insurance. So a consumer who has an insurance policy, maybe it's somebody who has a $2 million life insurance policy that owned a business, is a buy-sell, and they don't want it. They don't need it. They're retired. Their kids are grown up. They're tired of paying the premiums. They may be 78 in this example, and they decide, well, what do I do with this policy? One of the options is to lapse it and take the cash value out. The other option is to see if somebody will buy it on the secondary market. And that's what a life settlement is, and that's what we do. So we're one of the buyers of those policies.
So what typically kind of return profile or volatility profile do you typically see with these type strategies?
So the asset class itself has intrinsic returns that are anywhere from gross returns from the high single digits up into the low 20s typically. Depending on the specifics of the policy. When you put them into a portfolio, account for fund expenses and fund structures, typically you're kind of in the middle high single digits to low double digits return profile for products that investors come into within this asset class. The nice thing about this asset class is that the ultimate driver of return is a mortality event. And that mortality event is completely uncorrelated to the broader markets, which leaves the asset class very largely uncorrelated as well.
Yeah, that's been one of the greatest characteristics that we've enjoyed since we've been working together is just very low correlation to the markets and additionally low volatility, just a very, very steady return stream, which for our typical client is exactly what they're looking for. Another thing we really like, when you're in the alternative space, a lot of strategies require upfront capital be called and then kind of systematically called over time. And we love the fact that these assets can be deployed right up front, and you kind of avoid that J curve. So that's something that we've really enjoyed with your strategy and the asset class in general.
Yeah, one of the advantages of coming into an open-ended fund structure is that you have a ready-made portfolio that you're buying right into, and it's got enhanced liquidity over versus like a private equity structure. So you're absolutely right. You don't have that incubation period that you do in more of a longer-term locked-up structure.
So you all are not the only people in the life settlements space. Tell me what you do. What's a differentiator? What do you do better than your competition?
One of the key differentiators that we have is we can extract the beta in the space, which is buying and holding life settlement policies, which is what most of the market does. But we do some things that are semi-proprietary that add alpha. One of the things we do is we trade policies. We act kind of like a market maker, where we are very price focused when we buy versus mortality focused. So we're not trying to arbitrage the actuarial tables versus the doctor's opinions. We just want to buy these very cheaply, and we like to trade about half the policies out over a several year time frame. And if we can do that at a gain, that's wonderful. And then the rest of the policies we tend to get maturities off of, which tends to be a very large driver. And the difference there is we're seeing a lot of our return up front, and we mitigate a ton of the risk, because if we're trading out of the policies, that could be somebody who lives to 100, and which if we held that policy, maybe we'd lose money. In this case, we held it for a few years, we traded it, we made a little bit of money, and we redeploy. In the meantime, some of those policies have negative health events or pass away. The other thing that I really like about this strategy is its socially responsible nature, because we're dealing with mortality. One of the things that makes us feel real good about what we do here is we provide seniors significant capital for their financial independence. On average, a life settlement is 7 to 8 times the cash value. So we provide seniors liquidities, and then we can trade these like financial instruments to make money for our clients.
I think that's a great point. It doesn't happen often, but one of the comments or pushbacks we'll occasionally receive as we're describing the strategy is that it somehow seems like the seniors are being taken advantage of, or somehow that we're trying to capitalize on a potentially negative event. That is the maturity of these policies, the ultimate, death of the insured. But in fact, it's just the opposite, as you described.
Yeah, and according to a board member at LISA, which is a life insurance settlement association, there hasn't been a consumer complaint in this industry within the last 5 years. What industry can you name as that kind of track record?
One of the other things, and you all from different structures, the structure we've chosen does have a brief lockup, but then quarterly liquidity after that, which is a great characteristic. While our clients are all long-term investors in the space, at the end of the day, I think they still like to know that if they needed to access some of this capital, that it's fairly readily available.
Yeah, this is a hedge fund structure, I think was what you're referencing, which does have more liquidity than like a private equity structure, and it's good that your investors have a long-term horizon. But it's also nice to know that liquidity is there, given the right notice and in the right time invested, and that makes it for a flexible portion or within a portfolio.
Rich, an effort to keep these little segments small enough to actually get our clients in to view this. We're gonna wrap up here, but I just again want to say, look, we've the time we have been working together, very successful. You guys have done a great job, and not just on the performance side, but the service side with your team has been great. Our clients have been very appreciative of the work and results that you guys have put up, and I just want to thank you for that partnership, and hope you'll come back on at some point and maybe give us an update or two down the line.
We'd love to. We've really value our relationship and with Navitier Wealth, and grateful for the opportunity. Thank you.
Thank you. We'll talk soon.